Just wanted to welcome everyone and thank you for taking the time out of your day to be with us. The past year has been interesting and we're happy to be back in a little bit of normalcy and getting some words out there and connecting with all of you again. And we appreciate the opportunity to be in touch today. And we're hopeful that when circumstances allow, we can be together in person and do these trainings in a more personal level. I'm Jen Cummings. I'm the Director of Business at FAME. I've been here about 8 years, and I came to FAME as the senior workout officer. So all of the defaulted loans would kind of come through me and the insurance claim payments. We do have Kim Getchell, who's a commercial loan officer on the line, and Karen Kunish, who's our workout officer as well, who are going to be handling the Q&A portion of the presentation, as well as the chat function. A couple housekeeping issues before we get started. We're going to be mentioning a few resources today and links that will be available in the chat function on the computer. Additionally, Kim and Karen will be answering questions in the Q&A function. And we'll pause after each topic matter to answer your questions. When you have questions, please use the Q&A window to submit them. You can open the Q&A window by clicking on the icon at the bottom of your Zoom window. Type your questions there, and Kim and Karen and I will do our best to answer those at that paused section at the end of each subject matter. And any questions we aren't able to answer during the webinar will be included with an answer in the translation of the webinar that'll be sent out afterwards. We'll also be doing a few informal polls today to get a sense of experience levels with some of our programs. And that's just to give us a better idea of where, what information would be most useful for you all today. And today is really about trying to come up with the best solutions to help your customers. And some of those would include FAME products. So we just want to dive into that. And if there's no questions, I'll get moving forward. Okay, so FAME exists to essentially take on greater risk for public benefit, and that public benefit really includes economic development and the creation and retention of good paying jobs within the state of Maine, and also working toward creating growth within those smaller communities in the state. FAME has been around since 1983, and we were charged with supporting all facets of business development and growth. So from startup all the way through growth mode and stability mode. And since our founding, we've partnered to deploy over $2 billion in loans and equity capital, utilizing our products that we have. And these partnerships have resulted in nearly 100,000 jobs created and retained across all of the major industry sectors that are available. So we're going to dive in today, starting with our most utilized product, which is our commercial loan insurance. That's probably what most of you are familiar with. And this product requires a financial institution intermediary. So a bank, a credit union, an investment firm that has a lending arm, all are able to obtain commercial loan insurance, which insures a portion of a loan made through an organization. We have two different ways that you can apply for commercial loan insurance. One is our online answer, and the other is a traditional application process. And we'll go into each of those in a little more detail shortly. We would mention that the online answer is a portal, essentially online, that the banking partner or credit union put in specific parameters into the portal, and a decision is generated within 24 hours. So an approval is immediate. A pending status would be that there's some more information that we need. And then if that doesn't work out, then we can go to our traditional paper application process, which is more anything that's been declined through OLA, or if the financial institution is requiring a higher level of insurance. Or if the limit is higher on that loan. So there are certain parameters that we'll discuss in a few moments to go over those. Within those two application processes, we also offer two types of loan insurance. One is pro rata, and that covers a percentage of a lender's loss after default and liquidation up to 100%. And then our leverage product covers 100% of the lender's loss up to 25% of the loan balance at the time of default. And we'll go into more detail on both of those products shortly. So the commercial loan insurance is relatively available to pretty much every industry, with the exception of a few that are listed on your screen. Religious or fraternal organizations, gambling, housing, investment real estate, and personal or family household expenses. I would mention that there's been some questions about whether or not FAME can insure construction loans. And I will say that we are able to insure construction loans once the construction is complete. So unless the builder is bonded, then we're not able to insure during construction. And we do have some different billing, cycling, timing things that would be nuances within a construction deal. But I just wanted to mention that as we talk about what we can't do, we can do construction. Just wanted to mention that. So we are going to go into a polling question next. So if you can just answer that, and then we'll share the results with everybody. So this is asking about how often you have utilized and your experience level with our online application process. We do offer OLA trainings, virtual and live, and anyone that's interested in making sure that they're on a list or would like us to come to your institution, we can do one-on-one trainings. We can do group trainings. Just make sure you sign up in the link there in the chat that will allow you to be on that mailing list. So I'm going to end the polling now, and I'll share those results with everybody. And it looks like there's a pretty good majority of people that have utilized OLA before, and some that have never used it at all. So those that have never used it, make sure that you sign up so we can get out to you and really dive into the parameters of that program. Okay. So we are going to go into a little more detail about OLA and what you can do within that program as far as limitations on loan size and some other and limits on pro rata versus leveraged insurance. So as you can see on the screen, these are FAME exposure limitations. So through OLA, we allow a 75% loan insurance policy on up to a $750,000 FAME exposure loan. So these are for term and line of credits. These are so $1 million loan could get a 75% insurance policy, which would be a $750,000 FAME exposure. We do decrease those limits a little bit for startup organizations, and we define startup as anything less than 1 year in open for business status. So there are some limitations that you can see there. Additionally, we do offer OLA and traditional paper application for refinancing of existing lender debt. So these are loans that are within your organization already that are not FAME insured. So not you refinancing out the bank down the street, but actual loan exposures within your portfolio are available for up to 40% commercial loan insurance on $500,000 of FAME exposure. There are some criteria that apply, including cash flow savings that would be available on our website that you could check out if you have any questions. Additionally, I would say our exposure limits within the OLA platform are $750,000 per borrower. Those can be combined, pro rata and leveraged, but we do have those internal caps in place. So as with all of our loan insurance products, our interest rate and term are decided by the lender. The institution or credit union that's providing the loan to the borrower determines the rate and term. Our online application fee schedule is outlined in front of you, and those are broken out based on the type of product that you're getting, as well as the exposure limit. So you can see those out there. We also offer, based on feedback that we heard from our customer satisfaction survey, we did begin to offer terms of insurance. So as opposed to annual renewal policy, as you'd see with an auto loan, an auto insurance policy, we offer 1, 3, and 5-year options for term loans and 1 and 3-year options for lines of credit. So you do get a little bit of a rate concession on choosing the 3 and 5-year options. However, I will mention those are non-refundable. So if you choose a 3-year option and after year 1, your borrower is doing a little better and you decide to drop that insurance policy, you don't get the insurance premium refunded. I will say there has been an adjustment to FAME policy in that the commitment fee and the insurance fees for the initial origination of your loan can be included in your loan amount and would qualify for insurance if there was a claim payment made. So that's a change from historical policy. So I just wanted to mention that as well. We're going to pause here and see if there's any questions that you have specific to OLA. And I'll let Kim and Karen hop in if there are any. Just going to pause.
Hi, Jen. We do have a question from an attendee. Their question is, would the steps be to apply for the loan insurance on a business loan or line of credit first before completing the bank application? Is the FAME insurance in lieu of collateral?
So I would say typically the bank has approved the loan prior to submission for FAME insurance, and it would be determined through the bank or credit union's underwriting process that a guarantee would be necessary for approval. And I would say that the insurance is not in lieu of collateral. We do require collateral to secure our loans. However, it's, I would say we're trying to mitigate risk as much as you are. So if the bank is comfortable with it, then you can submit it. We do insure unsecured loans at times, but the cash flow or other risk mitigations would have to be in place to make sure that that it's acceptable risk. So we like to look at it as there's kind of 3 legs of the stool. And if one is very strong, then the other 2 don't have to be as strong. But we're also looking for the lending institution to have faith that their customer is going to be able to pay the loan back. Does that answer that question? If the attendee can pop that in the chat, that'd be great.
Yes, that did answer their question. We have another question. How does OLA interact with SBA loans?
I would say OLA is relatively separate from SBA loans. I wouldn't say the same. It's similar to a product that the SBA offers. We have in the past insured loans that have a 504 guarantee associated with them. And we look at the SBA as a partner organization to try to best serve the lending partners in the state.
That is all the questions we had on that. Is there any other questions before we move on?
Okay. So the next polling question is regarding the experience that you have with the traditional paper application through FAME. So these are for higher level loan transactions or loans that you are looking for higher level of insurance on. And we're just looking to gauge the experience level with this. Okay, so it looks like quite a few people don't have any experience with this process. So we'll dive in a little deeper into that. And the FAME traditional paper application process is different in that, as opposed to OLA, where you're kind of taking the parameters and some financial information and entering it into a portal online. The traditional process is more manually filling out an application with your borrower, providing the bank's underwriting financial data. And then we look at the bank or credit union's underwriting and we do our own underwriting. So this process takes a little more time. It also is a little more expensive because we do have a credit department that underwrites the loans for us and determines recommendation for approval or decline. I would also mention that anything over $1.5 million in FAME exposure is required to go to our board of directors for approval, and that can add a portion of time to the process. So our pro rata loans, term loans, have limits that are shown on the screen, up to 75%, up to $7.5 million. That limit of $7.5 million of FAME exposure is not available to startup companies and would require our board of directors to determine there to be significant public benefit noted within the loan transaction request. We do offer 90% loan insurance for up to $5.25 million exposure, and 100% loan insurance is available to loans for veterans. So those are some just some parameters we want to mention. And the leveraged term and leveraged term loans have a 25% insurance limit up to $2.5 million. Also available is that refinancing that we just discussed, and also available for lines of credit. So again, I mentioned that most decisions are made at the staff level, but once we get to that higher dollar limit and risk rating threshold, we'll determine if the board is needed to approve the transaction. So I'm going to show our fee schedule for the traditional paper process. And I'll also mention, because not a lot of people have dealt with this process, that once you submit your application and our loan officer looks it over, they may communicate with you and ask for additional information that might be missing. They may ask for questions that our underwriting group has come up with to try to get to a yes answer. We really try to always say yes if we can. There may be some nuances associated with that, but we always try to get to a yes answer to help you all be in touch with your borrowers and allow for approvals to go through. So on these traditional paper applications, we do offer those term 1, 3, and 5 year options with that rate concession for the 3 and 5 year options, a little bit of a savings there, and also the 1 and 3 year options on the lines of credit. And I would say that from application to approval, depending on the loan amount and complexity of the deal, and whether it requires board level approval, we'd probably be looking at about 6 to 8 weeks for approval, again, depending on how many back and forths we have to do, whether or not the application package is complete. But you can always feel free to reach out to any of the lenders or myself to kind of gauge length of time. And if you have constraints, we can try our hardest to abide and get you into your time frame to get your closing for your borrower. We're going to pause here and see if there's any questions about the traditional paper process application. Okay, hearing none. We are going to go into the last poll, I promise. So one more. And this is about understanding the difference between pro rata and leveraged insurance. So we're trying to understand what everyone feels is the difference and how we can explain that best to you. So this is the last poll. And also I'll mention here that one of our lenders, Roxanne Broughton, did do a webinar on the difference between pro rata and leverage insurance, and that will be shared a little later, I think, in the chat. So, and additionally, as we dive into this, you can look at the interactive tool on our website that allows you to put in some variables and some assumptions on a loan transaction to understand what product would be best for you. And it's literally an Excel sheet and kind of calculates everything for you and shows you what the insurance claim payment would be in a situation. And we'll look at those in just a minute. So it looks like most people, about half of you kind of know the difference, but not about a quarter of you know pretty well. So I will go into this a little bit further than just so we make sure everyone has a good understanding. So first we'll go over a pro rata example. And this is the interactive tool that's available on our website. And that link will be in the chat. And so pro rata is best when there's a large gap between the original loan amount that you're giving your borrower and the value of the collateral. And when we talk about value of collateral, I would assume, being a workout person in my past life, that we're looking at disposition value. So once you're liquidating that collateral, what are you going to get at the time, worst case scenario? And that's the number I would put in. So obviously there's going to be some assumptions that you have to make to see which product would be best for you. And as we look at this example, I do want to note that we are utilizing this as a traditional paper application. So when you're looking at the fees that you're paying, that is what this is based on, the traditional, not OLA. So obviously it would be a little bit different if OLA were used, because the fees would be a little bit less. So in this specific example and on the interactive tool, those inputs at the top that are in the highlighted box are what you're able to put in to see which product would be best for you. And in this situation, we're looking at a $950,000 loan amount, and you can put in both the leveraged and the pro rata percentages that you'd be offered, what your balance at default would be. So that's kind of one that, maybe this one's paid for 2 years and we're now down to $850,000, and we got $500,000 when we sold their real estate, and it cost us $1,500 to do that. So all those assumptions are input in, and you can see that at the bottom box, the leverage claim payment to the bank would be $212,875, showing the loss to the institution at $138,625. Whereas on the pro rata, the claim payment to the institution would be $263,625, and the lender's loss would be $87,875. So in this scenario, pro rata would have been better because the lender's loss is limited to about $90,000 versus leveraged, it would be limited to about $140,000. So you can see that in this situation, the gap, so the gap between that $950,000 loan amount and the $500,000 asset value is what caused the choice to be best for the pro rata option. So the next slide is going to show the same nuances, with the exception that the value of the collateral is $600,000 and the balance at default would be $750,000. So they paid this loan a little bit longer, and the value is closer to the original loan amount. And leveraged is best when the liquidated asset is closer to the original loan value. So when we look at leveraged insurance, we're looking at hedging the value of the collateral at a future date. So to understand that, I would say most of the time, leveraged is chosen when there is an asset that does not depreciate rapidly, like real estate, like very heavy equipment, things like that. You wouldn't use leveraged insurance on a line of credit with accounts receivable as collateral. It's more concrete collateral that you can hedge the value of the collateral at a future date. So like I said, like real estate. So in this situation, we're looking at all of those assumptions that I just mentioned, and the leveraged claim payment is the lesser of three calculations, as you'll see in that bottom box on the left, 100% of the lender's loss. So that in this situation, that number is 151.5. the balance at default plus collection costs, 187, or the original insured balance. So it's going to be the lesser of those three figures. And in this situation, it was the 151.5, which made the lender's loss, the bank's loss, zero. If they would have chosen the pro rata, their loss would have been the 37,875. So you can kind of see the difference there. And this tool is really great in that it allows you to see both situations side by side, but again, understand that you are choosing the assumptions that are within that. I'm going to pause for any questions on this. And I know we're bumping up against time and I want to be respectful of that. So if anyone has to go, feel free to go and we will send the translation out later on. Okay, I'm not seeing any questions. So we've talked about our commercial loan insurance products and we're going to move into our Fame Direct products. So these products can be utilized in conjunction with commercial loan insurance. They can be done separately. They can be utilized for startups, for growth mode, for mezzanine or sub debt. These can be used for gap funding for traditional bank loans that need a little gap filled for whatever reason. So these are very flexible. They are priced to take on more risk and they're priced because of the risk level of them. These transactions, these Fame Direct loans are a Fame to direct to consumer loan transactions. So there's no bank or credit union intermediary as with that commercial loan insurance product. We do have $1 million loan amount on maximum on these, and the rate is fixed at the time of commitment at Wall Street Journal Prime plus 2%. We do have a 5-year balloon on these, but the amortization is flexible based on the collateral type. It's not a grant, it's definitely a loan program. We expect repayment. There is a link in here on our website that you can go to and apply or refer your borrowers to apply there. There's also a nice list of everything they would need to apply for this transaction. Anything over $500,000 in exposure would require approval by our board of directors. So again, I would say we do a lot of the time do participations with other institutions in Maine, like Maine Technology Institute, Coastal Enterprises, all the CDFIs in the state also participate. If someone needs more than $1 million, we have other partner agencies that we can go to and have them participate in, just as you all sometimes participate loans with other banking institutions. So Fame also services some loan portfolios for the state of Maine as part of our product offering. These are more specific products, and so we have a couple here that are listed that the application process is the same. It would go through Fame. These can be found on our website. The Maine Rural Development Authority is a specific pool of money that was set aside to rehab and fit up rural industrial properties that were vacant or need rehab in rural areas of the state. I will say rural is kind of a loose term, so I wouldn't not apply for that because of that wording, but that has a separate board of directors that meets and approves those loan transactions. But these are a lot of times done in conjunction with that Fame Direct loan as well as commercial loan insurance. So just different pools of money that are available to kind of beef up your capital stack. The CALP program was designed to help remove and dispose of oil storage facilities, so gas tanks, things like that at convenience stores. That has a really good interest rate, really great terms. So if you have any customers that need that, that's a great resource through the state. Our Red Lip agencies, so Regional Economic Development Revolving Loan Program. These are loans that are made through all of the regional economic development agencies throughout the state. So more concentrated to specific communities as opposed to an overall state agency. Okay. The next one, FAME does service all of the loan portfolio for the Department of Agriculture. So I did list all of these. I won't go through them specifically, but they each have their own set of parameters, interest rates, term requirements, and limits on their loan sizes. So just to let you know that those are available, and more information is always on our website if you want, or the department's website. We did want to put a slide in there about what happens if your loan is in trouble. So whether or not, and these would be, again, kind of specific to the insured loans that we had talked about previously. We do obtain a data submission monthly from each of your institutions that shows us a listing of all of the loans that we insure for you, if they're past due, how much accrued interest there is, what the loan balance is. And that allows us to see more specifically how many days past due they are. And if we should be concerned, Karen may reach out to you, or you can reach out to Karen. And we really like to have a collaborative approach in workout scenarios to see what and how we can help. And if your borrower needs additional concessions done to their loan, maybe a restructure to stretch out their payments, we can definitely help and consent to those. Additionally, Karen is really great at working through the claim process. So we are willing to work with you guys and can touch base and do that on an as needed basis. And really try to work collaboratively with the bank to mitigate risk as much as possible. So I'm going to pause there. And if there's any additional questions, you can get those in. I did have a couple of announcements that I just kind of exciting things that we're working on that I just wanted to let everyone know before we close, close for the day. We are
Hi,
working.
Jen.
Yeah.
We do have a question.
Okay.
It is can any of these agriculture programs be used for aquaculture projects?
Yeah, I think that the AMLF, the Agricultural Marketing Loan Fund, could be used for that. Additionally, FAME is not, we're not prohibited from doing aquaculture, but I think the AMLF program would be a good fit for an aquaculture loan.
Do we have any more questions before Jen moves on to our exciting news? Looks like we don't. We're good to go.
Okay, thanks. So we are working on a complete website redesign right now. That should be launched soon. We don't want to give a specific date, but within the next couple quarters. So that's really exciting. We've been working hard on that. We do have our annual Showcase Maine dinner scheduled for November. And you should be getting a save the date on that soon. Governor Mills is going to be our speaker, so we're excited to have her join us. And then the only other thing that I wanted to mention is our board of directors just approved on Thursday an increase to our online answer program. So that OLA program we just discussed, all of the limits I said today are going to be doubled within the next month and a half. So those exposure limits will go right up to our board level transactions. So this will hopefully allow you to more rapidly gain approval for your borrowers and let them know in a more timely fashion. So that's a direct response to those customer service surveys that you all filled out. And we thank you for your participation in that. And it allows us to see what you all need to serve your customers better. So hopefully that's exciting news. For us it is, and we're thrilled to be able to do that. So the last slide that I have is our commercial lending team, and it shows our contact information. And please feel free to reach out to any of us to discuss a deal structure wise, or if you just want to toss some things around, we can talk about it. And if you want to be notified for future FAME events, please join our business update list in the link in the chat. And again, we really appreciate your time today, and thank you for joining us. And a fully transcribed version of this webinar will be emailed to you soon. So thanks again for joining, and we really appreciate your time. Have a good day, everybody.